going on? Welcome to another video of Wealth Operations with myself, Johnny Lynum, where I bring together wealth and the tactical operations of the military. And so today we're going to be talking about my 4F process. That's right, how to find deals, how to finance deals, how to fix them up, and then how to execute the finish. And the finish could be, whether we're refinancing or we're going through how we're going to execute our business plan. And so today I really wanted to walk through my 4F process because it's something that it's evolved over the years from, only focusing on single families, but then really looking at the no kidding nuts and bolts of it to understand how the impact that building my multifamily property, my process of buying multifamily deals, and how those come together. And so really the first F is find. You got to be really good at finding deals. This is where it really starts at, because understanding, your acquisition process and how you're going to find the deals is going to dictate a lot. When I started off initially, only place I was really looking was the MLS. We did have Zillow back then, 2015, but before then, I was really looking online, finding deals online, and it was deals that I wanted to live in, because I really wasn't looking for an investment. I was looking at using my VA loan. It was 100% financing, so I didn't have to bring a lot of money to the deal, to buying the property. And so for me, I was really looking online. But then when I became an investor, coming out of the '08 crash, looking 2010, 2011, my second home that I bought was a HUD foreclosure. So going on the HUD foreclosure website, where they have the priority is to get owner occupants in those properties. And so the first 7 days usually with the auction, owner occupants. And so I was able to buy discounted real estate that was foreclosure that were in great areas. The first one was in a golf course community in Keelum Creek in Newport News, and the second one was in Aldi, Virginia. It was like 6 years old, built in 2007, bought it in 2013. Both of my VA loan, both were HUD foreclosure. But after that, at becoming a pure investor, I had to look and be creative. I started learning how to find deals. So direct mail, cold calling, now Facebook Marketplace, running Facebook ads, running different type of ads on other social media platforms to reach people. Connecting and doing networking is a great one. Wholesalers, other people that are finding deals that can give you or mark the deals up and wholesale the deals over to you. Connecting with attorneys, other appraisers, different people, finding different tax lien websites, opportunities across the board to find deals. And that's why I really tell people you got to find your niche, because you will spread yourself extremely thin, too thin, if you're trying to market all these different things. So look at like networking. Everybody should be networking, number one. Once they get clarity on what it is they're looking for, find other people that have those deals. But then two, find one or two mediums that you're going to use to focus your marketing on, whether it's Facebook ads, whether it's, sending direct mail, it's cold calling, it's sending text messages, it's sending postcards, whatever it is. Figure out what it is that you're going to use in order to drive leads, because you have to get leads. You have to convert a certain amount of those leads, and you're going to close a certain amount of those deals that you get under contract. That's the math, that's the process. But you got to get really good at finding deals in your process for doing that. Second, we got to put the capital stack together. Finance. The second F is finance. You got to be able to put the capital stack together. I know for me, a lot of people, you have the limited beliefs. I don't have a lot of money. I don't have this. You got to focus on what you do have. Do you have grit? Do you have determination? Do you have good credit? Like for me, it was like I got the VA loan. I ain't got a lot of money back then, but I had the VA loan, and so I used the VA loan to my advantage. That was the resource I had at my disposal, and so I leveraged it. But you got to be able to figure out the capital stack. And now that I'm an experienced investor, it's been almost 20 years since I bought my first property, that now, like, there's an infinite amount of money out here. And it's the matter of now putting the deal together, like the branding that you can do with letting people know you're a real estate investor, the type of deals, because there are more people that know that they want to invest in real estate, that they need exposure to real estate, and they can make money in real estate, but they don't know how to find deals. They don't know how to get access to people that have deals. And so that's where you come in. If you're able to find a deal, now understanding the people out there that want to partner with you, whether it's a bank, a credit union, it could be a private investor, it could be a hard money lender, it could be a relative, it could be you partnering with your savings, your own capital that you have to put in a deal. Like, you're limited by your creativity. There's hedge funds. If you got a big enough deal, that'll lend you money. And other investors that you can partner with that's in your local market. And so for you, it's really understanding what resources you have at your disposal, and now how do you bring the deal together? Because one of the great ways to do this is to have the seller partner with you in the deal. They can give you seller financing. They can hold back a second position note, and maybe not completely seller finance, but they can hold back a portion of your down payment. And so there are a ton of ways. And so that's why I encourage people, like, it starts with your mindset. Like, you got to get started, get active out here, understand the different strategies that seasoned investors like myself are using, where you can know and have the conversation with the potential seller and know how it's going to benefit the seller for them taking that deal. Because the thing is, like, you can actually pay, if they give you the right terms on the financing, you could pay someone what they want a lot of times if they give you the right terms and the right interest rate. But if you don't know the process to go through to have that conversation and create a win-win situation for the seller, it'll never happen. You'll never be able to put the deal together. And so understanding how to bring the financing to the deal is extremely important. Then the third one, once you figure out the financing, you get the deal closed, then how are you going to add value? What is the business plan? How are we going to execute it? Are we going to self-manage? I recommend we don't self-manage. Been there, done that. It's not worth the headache and the pain. I got stories on that from just dealing with challenges that come to stories that come from people that are managing. They don't think that they just going to give you the sob story. It's one-on-one person. You're not a business. From my experience, that is a lot more challenging to deal with in those situations. And I found that professional management, you have attorneys they can tap into for evictions when people don't follow the lease. They can take care of the day-to-day rent collection, the day-to-day maintenance, coordinating with vendors, all of that stuff that slows you down, that prevents you from working on your next deal with building wealth and building a true portfolio. They can take care of a lot of those things. And so for me, finding the right property management company, it takes work and effort, because I found more bad property managers than I have good. I'll say that again. I found more bad property managers than good property managers. And the thing is that I found you want to hire slow and fire fast. I'll say that one again. I've learned this one over the years on the single family side and the multifamily side. You want to hire slow and you want to fire fast. What does that mean, Johnny? You want to be able to do your due diligence. You want to have multiple interviews. You want multiple property management companies. You don't want to go to the first one. You want to know the right questions to ask. And you want to make sure that they are a good fit. You want to talk to current owners that they are managing their properties for and understand their experience with them. Are they happy? Have they done value add while they manage the property? All these type of questions you should be asking. I got a whole laundry list. You can send me, you guys send me a comment down below. I can share that list with you. And oh, by the way, if you're gaining information, please like and subscribe to the channel. Today we're going through the 4 F's. Number 3 right now we're jumping into is the fixed portion, how to fix it up. I'm a value add investor. I love taking undervalued properties and improving them, whether it's through increasing rents, through driving appreciation through increasing the rent by going in and doing renovations on the units, which allows us to be able to charge market rent, but then also looking for opportunities to lower the expenses as well too, in order to increase the net operating income. And then boom, now we have an apartment complex that's worth a heck of a lot more than what we paid for. And so that's the process that I love going through to add value. And especially on the multifamily side, where you don't have to you do one multifamily project a year, you're good. If you're like me, like if I get 1 or 2 deals every couple years on the multifamily side, I'm good to go, because I built my portfolio up in a way, I've done the work, grinded it out, where now I can build up other streams of income. I can diversify my portfolio, and so I don't have to continuously chase deals. And I think that's where you see a lot of operators, especially on the larger syndicator side, that they're chasing deals because they live by acquisition fees. And so that's something to look out for too. My passive investors, that you want to make sure you align with the operator with their goals, and they're incentivized to manage the property properly, and they don't get paid all their money on the front end and not tied to the execution of the deal. And so that's something to look out for. On the fixed side as well, your contractors is huge. when it comes to being able to be profitable and execute your business plan. Your property manager is key and critical, but also right there is your contractors, especially if you have a heavy value add lift. A lot of times, you know, depending on the property, you can have one where it's low vacancy where it's producing some income, but as people move out, as the leases turn over, there are going to be opportunities to go in, do renovations, and improve the units. We really like those projects. That's a whole nother video, but just like, you know, for instance, I'll do a video on that and share like the strategies that we're using, and we'll drop those videos in here. You kind of see the walkthrough right here that we have in here with this is a recent unit that we did in my multi-family portfolio down in Montgomery, and we're just improving the unit. So new vinyl plank flooring. You're going to have agreeable grade paint. We're going to change out the light fixtures and the wall outlet covers, as well as we're going to paint, do the epoxy over the bathtub, and it's going to look like a really good unit. This is going to cost us about $6,500, and we're going to be able to raise our rents up. In a lot of cases, we've raised our rents over $300 to come up to market rent, from $600 to $900, and the goal with multifamily, when you're doing the fixes and renovations like that, you want to be able to recoup the money, that $6,500, in less than 48 months. And so if you're raising rent $300 a month in 1 year, that's $3,600. So you're going to make your money back in less than 2 years. It's a phenomenal investment on increasing the rent to capital. If you were going to put $6,500 in a unit and only raise it $50, I would tell you not to do that, because it's going to take you a lot longer than 4 years to make your money back. So that's just a rule of thumb. Moving on to 4. Once you go through, you got a right property management company, you got a great contractor, you turn the units over, you're up to market rent, and now you're finished. Now looking at your plan when you started, are you going to keep the property, refinance it, and bring in long-term debt at the new value? And so you'll pay the first loan off. Hopefully you pull some money out your pocket because you raised the value enough, and now you're taking money out and getting your money back, and you're moving on to the next deal. Or you're maybe looking to sell it. Some people, they like to flip the properties, run up the value, and now they take that profit out, do a 1031 exchange where they defer any capital gains, or you know, they may look at just selling it outright, pay their taxes, and move on to the next deal. But you know, you got to start with the end in mind. And so knowing your strategy up front when you're doing your underwriting is going to be critical to your success and finding the deal. And then you really just go into repeat mode. You execute it, you make it happen, and then you rinse and repeat, and you're back at it again. And so the 4 F's are really straightforward and simple. You know, it's a process I've learned over the years that really keeps and breaks it down. We explain it, but as I'm working with clients, that you want to make things into a framework and keep it simple where they can implement it wherever they are. And this works in any market. I've used it virtually, being in the same market where I was doing my deals, that there's a few little nuances you have to add in there. But yeah, hopefully this is helpful for you guys. And just the process is pretty straightforward, but you actually have to get in here and you have to make it work. And the only way to make it work is taking action and implementing it, what you're doing and what you're building with your portfolio, and understanding how real estate can serve you is super critical at the end of the day. So make sure you guys like, subscribe to the channel, share down below other content you want me to share. Make sure you tune in to my $1 Million Coffee Hour each and every Wednesday, 8 a.m. Eastern Standard. And I'll see you guys on another Wealth Ops video. Let's go. Let's make some equity happen.